Perhaps not. Just checking that it's... I think this is a good sign. I think we're... Sorry for those of you that might be watching me. Oh, brilliant. I'm live everywhere. Great. Okay. Brilliant. Hello, everyone. Sorry for that technical issue. Now it's working. I can now see that we are streaming in different places, so that is brilliant. Apologies for that little bit of a delayed start. Now, just to recap, just in case I wasn't streaming before, even if I was and I didn't realise I was, just to recap what we were talking about before, that we have the disclaimers in the top left-hand corner. Please read them. If you need to pause the video to read them, by all means, please do that. You've got email addresses here, becky@tradictiv.com and support@tradictiv.com, that you can email if you have any questions. And you have a link here, which is tradewithufos.com/Becky, which you can use to come and get apps and platforms, book one-on-one coaching if you'd like, and you can come here, sign in and ask questions in this public setting. By asking questions in this public setting, then we can answer them in this public setting and we all get a better idea of what's going on. We can all learn from this. Okay, so let's have a look at what I would normally do is go through trades that we've already taken, but where we're starting a little bit late today but need to finish at the same time, I'll skip past that and we'll go straight into looking for new opportunities. Now, just to say, we are streaming in different places. We are now streaming in different places. So I will need to cut the stream around about the halfway mark. So what we'll do is we'll spend 20 minutes or so finding new opportunities, and then we will spend cut the stream to the free platforms and spend the remaining 20 minutes inside the closed coaching so that we can continue looking for opportunities there. Okay, so first things first, let's go to fxstreet.com first. So with fxstreet.com, what we're doing here is having a look at which currencies we might want to avoid, or which currencies we might want to put maybe a little bit less risk on our trades. And the reason for that is because what this economic calendar is telling us is when we have news coming out, scheduled news reports that are coming out on these particular countries and therefore their currencies, that may impact the markets and make them move a little bit more. If the markets move a little bit more, that could be a good thing if you're on the right side of it, but obviously a bad thing if you're on the wrong side of it. So we want to just keep our risk a little bit tight on these particular currencies for the ones that have news reports coming out. So today we have some news coming out on the Canadian dollar. We've already had some coming out, but we've got some other reports coming out as well. We've also got some news coming out on the Australian dollar. That's going to be later on this evening, US time. And then nothing on Thursday, and on Friday we have some news coming out on the US dollar. So what we might want to do is, I'm not saying we won't trade the Canadian, the Aussie or the US dollars, but we might just want to make sure that we reduce our risk a little bit if you are risk averse or not completely risk tolerant. So what I'm going to do is go to TradeStation. And we are going to find some opportunities on TradeStation. If we can't, then we will go and have a look at perhaps weekly charts that we can take a look at here. Now, what I realised just by looking at TradeStation is we have perhaps just one that we can look at that fits the criteria. I'm just going to explain very quickly why. We use a scan on TradeStation to help us figure out where we have opportunities that are close to current price, so opportunities that we're likely to get into soon, where those opportunities are sensible, i.e. worth doing, and where those opportunities have a confirmed probability either up or down, so that we either buy or sell. Now, the scan is going through each of these currency pairs on different time frames to come back and tell us where those probabilities lie. And at the moment, most of them that have these yellow boxes that say near sensible, which would be the ones that we'd be more likely to look at, most of them do not have confirmed probability one way or the other, because they've got these little grey boxes. Those little grey boxes tell us not confirmed, not enough probability either way. But on, I was going to say, on this top one, it's literally just gone away there. On this top one, we had a near sensible short. It was a yellow box telling us that price was near and a confirmed probability down. It's probably moved a little bit far away now for it to be highlighted. So for the time being, there's actually nothing on this scan of all of the time frames and all of the currency pairs we could look for, nothing on this scan that's popping out as a decent opportunity. But what we don't have on this scan are weekly climates. So what we'll do is we'll just do it manually today, and we'll go through and we'll look at, we'll start with the majors, and we will look at weekly on the left, 144 on the right. Now there might be some existing trades on here that we have taken before that I haven't gone over today. For example, this one, which looks like that was a break-even trade. So what I'll do is I'll just use a slightly different broker to keep it all nice and synced. So even then we've got trades on here that we placed, and again I think that was a break-even trade. Let's use a different broker, one that we don't ever use. Yeah, I guess we'll use Forex.com. And then that way we won't see different things on the chart that are kind of getting in the way of what we want to be looking at now. Okay, so on a weekly time frame on the left-hand side, our US dollar Swiss franc does not have enough probabilities either way, so we're not going to do anything on this one. We're just going to cycle through different combinations of currency pairs until we find one where we have the right setup. Again, it's a bit more manual a process than what we would usually like to do, but it just so happens today that despite scanning through all of these different criteria, our TradeStation Scan isn't coming back with anything on those timeframes that we have where we have decent opportunities. So we just need to be a bit more manual on different timeframes here. Now, just to explain very quickly for those where this might be the first Forex session that you've watched with us, or even the first session you've watched at all with us, you might be thinking, you're pointing to a dot and saying that we don't have probability. What does that mean? We are using an app called the AutoClimate app. It's a free app on most platforms you can use it on. We've got TradingView here that we're using it on. You can get it on MetaTrader, and depending on whether or not you use other of our apps, depends on whether you pay for it on that one. It's also on TradeStation, and it's also on our platform, which is called Top. Now, what this app does is tell us where probabilities lie based on these dots. Those dots tell us where the probabilities lie. So if it's a thick blue dot, that tells us probability is upwards. If it's a thick red dot, that tells us probability is downwards. If it's a thin dot of either colour, that tells us probability neither direction. Now, as Forex traders, we want to either buy and make money as the price goes up, or sell and make money as the price comes down. So if there's not enough probabilities either way, there's no point doing anything. We're not going to have much to do with it. So we're going to firstly scan through these different markets on this time frame, which is weekly on the left. Sorry, we want a different broker, don't we? Weekly on the left and 144 minute on the right. You can use a 240 if you want, or even a 60 minute if you want on the right hand side. The point of the right hand side chart is literally just to find an opportunity to get us in a little bit more tighter than what we would on the bigger time frame. Now what the bigger time frame does is tell us where the probabilities lie. So in this case, on the Australian versus the US dollar, two of the currencies that were unfortunately on that list of high impact news coming out on them over the next few days. But the bigger the time frame, the less that matters. On the Australian dollar versus the US dollar, we have probability to the downside. That's what that AutoClimate app is telling us, probability down, thick red dot. That then tells us we want to look for short opportunities. So what I'm actually going to do is I'm going to cycle through a couple of different time frames to see if we can find opportunities here, to see if we can find a decent probability rate, or a decent probability of everything lining up. So we'll focus on AutoClimate for now to find that opportunity, which we've had. Now we want to find our opportunity to sell. Now, if we're going to sell and we want to be specific about where we're selling, we use AutoUFOs, which is a paid for app. Depending on which platform you use, depends on how much it costs. And what the AutoUFOs do is show us where buyers and sellers are. So if it's a green UFO, that shows us where buyers are. If it's a red UFO, that shows us where sellers are. If it's showing us where sellers are, we want to sell with them, because the more sellers there are, the more likely it is the price goes down from there. So if we're going to try and be specific about where exactly we sell, we want to be selling where loads of other sellers are. Now, depending on the time frame will depend on where these sellers are. So we can switch between time frames within a small range so that we can find one that lines up. Now, there's a third element that we layer into this, which is the EMA value, exponential moving average value, from the higher time frame. Now, we do this because at the EMA, at that line, if price were to meet that line, in this context, there would be sellers. Now, if there are sellers, I've got something flashing at me from TradeStation. Nothing great I want to see. There might be an opportunity to come back to in a minute, but nothing for now. So back to the EMA. The EMA in this case, if price were to come up and hit it, people would sell. So what we want are these red UFOs, so sellers, at the same price that we have the EMA, more sellers, in the context of a downwards climate, which is sellers in general. Sellers, sellers and sellers, and we sell with them. So again, we increase our probabilities. So for the time being, the EMA is 7226. And what I'm going to do, just to be very visual about this, I'm going to draw a line on the chart. Let's make it that same kind of bluey colour. And we're going to put in the coordinates of what that EMA value is. And what we're going to do, I need to change to the Aussie US dollar here. There we go. I was wondering what was happening there. Let's put that in again. So 0.7226. And we're going to see if we have UFOs that line up with that. We do, which is great. We've got UFOs stacked on top of the stacked on top of each other, one after the other. So we have sellers followed by sellers, followed by sellers, followed by sellers. Now, as price goes up, so too will the EMA. It will move with price. So it's likely going to fall into this last one. So as price moves up, this EMA number also moves up, and they meet somewhere in here. So what we'll do is we'll put up a selling opportunity here, see if what happens. What we might find is that as price comes up and hits these other sellers, it might go down from any one of the sellers that are in between, but we stick to our rules. Our rules are there to increase our probability, so that's what we're going to do. Okay, so let's take this top UFO, put that trade on. So I'm just going to draw on the chart first of all, just because it gives us a better idea, a visual idea of what's going on. So that will be 81. Yes, 81. 7281 is going to be our stop loss. Our entry is going to be 7238. So all I've done is I've taken the numbers that the UFO gives me, I've not made it up, and I've just rounded down the bottom one. That gives us our entry. And on the top one, I added 5 pips of wiggle room and 2 pips for the spread. So that gives me 7 pips in total that I add to that number to give me 0.7281. Obviously rounded up as well. So with this, that's our entry and our stop. Where are we going to put our targets? Now, on the left-hand side, normally what we would do is use this to show us where our final target would be, where we want to take the most amount of profit from. And what we do is look for buyers on this chart. We don't have any buyers on this chart. There are no green UFOs anywhere on the left-hand side, showing us that on a weekly time frame, there's not a bunch of buyers waiting around. So what we'll do instead is we'll have a trailing stop for our second target, and just our first target will be in there to keep us safe. Hence, we call it our safety target. So our entry is 0.7238. Our stop loss is 0.7281. Our risk, I'm going to put $50 in here just because that's a nice round number. $50 on one half of the trade, $50 on the other half. Nice $100 risk. That's why we do it. That's why I keep it that way. You risk obviously whatever you want to risk. Now all I'm doing with this first target is whatever the risk is in pips is going to be whatever the target is in pips. If I'm risking 43 pips entry to stop, then I want to gain 43 pips from my target. We do that, and let me just put that in to show you what that looks like, and we'll put in a horizontal ray and put in the price just so we can see it visually. So the reason that we do that is because then if price comes towards us and moves away in our favour and then moves against us, so it moves a little bit in our favour but then moves against us, we don't win or lose anything. If we just had our target all the way down here, or a trailing target, price might go a little bit in our favour and then against us, and we still lose, even though it went a little bit in our favour. So we put this safety target in to keep us safe, so that if it goes a little bit in our favour, but not a lot in our favour, we don't lose, basically. So what we're going to do here is for the second target, we're going to put on 0.7238. 0.7281, so same risk, same entry and stop, and we're just going to leave profit target blank, because that way we get into that trade, and as price moves in our favour, we will trail our stop behind new UFOs that form. So that's what we'll do here. I'm going to put a little note on here. So placed on the 8th of December on the live session, so the free stream, and it was T2 was trailing. I'm just going to keep a little note for myself just so I can go back and have a look at it in time and see what happened, and obviously update you guys on the next session. So this is Australian US dollar. It's a weekly chart and a 144. It's a short, and this is at 0.7238 to 0.7281 with the target of 0.7195 and a trailing for the second. Lovely. Okay, so that's the first trade. What I'm going to do, because I was late to the party today because of my technical issues, we will place another trade so that we can see what's going on there. I'm just going to refresh the chat boxes again, just so I'm keeping up with this and seeing whether you guys have any questions. Nothing for now. Okay, nice. Okay, so what we'll do now is we will keep cycling through and find a new trade on... we'll keep away from the majors, actually. Let's have a look at sort of random cross pairs and see if we have anything there. Once we find that, then we will cut the stream to the free places and continue in the closed coaching, looking for more opportunities. Anyone watching anywhere, if you have suggestions that you think we should be looking at, by all means put it in the chat box and I will go and look. So we have on the Euro Yen, and it's just loading the AutoUFOs for now. On the Euro Yen, we have a thick red dot, probability downwards. So on a weekly time frame, we have probability to the downside. Now our EMA is 129.32. So I'm just going to draw that on the chart so we see it visually. 129.32. And then once these UFOs, there you go, they've loaded, we can see if they line up, and that's perfect. Look at that. So as price moves up, the EMA will also move up, unlikely to move up outside of this UFO. So all lining up, we've got sellers lining up with sellers in the context of a selling environment. Another decent trade that we can place. In this case, we will use this chart for our target as well. So our entry will be 129.27, again, just rounding down that bottom number. Our stop loss will be 129.56. Yep, so that's 7 pips above. So the entry was 129.27, stop loss was 129.56. Risk is going to be $50 again just for example's sake. 29 pips is going to be the difference between our entry and our first target, because it's the same distance between our entry and stop, and that's at 128.98. So that one goes in nicely. Our final target in this case, see on the left hand side, and we'll wait for these boxes to go so we can just show you better, or we can just cross them and they'll go away quicker. So we have on the left hand side, we're in the context of a downwards climate, probability downwards. What can stop price moving down? Lots of buyers. The first stack of first big stack of buyers is at this price. It's between 125.136 to 122.688. So what we'll do is we'll take this top number, so the first place where we see buyers, so 125.136, I'm going to round it up and add a couple of pips to give us a little bit of room there. So it's going to be 125.16. That's going to be our final target. In the one before, in the example before, we didn't place that final target because we didn't have the UFOs. We didn't have any buyers to show us where they were. So we had to put it in as a trailing stop. In this case, we don't need to do that. We've got examples here of where those buyers are, so we know exactly where to place our target. So it's a 14 to 1. So the way that works out, we take 1 to 1 on the first half of the trade, 14 to 1 on the second half of the trade. So it averages out somewhere in the middle, about 7, 8 to 1. Okay, so let's place a little note on here. So placed 8th of December in the live session. Again, I'm just going to update my little log so that I can have a look at it another time with you guys and obviously analyse what happened and did we make money, did we lose money, did we cancel the trade, how did we manage it, things like that. So this is Euro Yen, weekly chart again, short. This is 129.27 to 129.56. First target is 128.98 and second target 125.16. Okay, so we've now placed 2 trades on our sort of live session out to the free places. Hopefully that's made up for the late start. We normally place 1 trade, so hopefully having a couple has sort of made up for it. If you have any questions, because I realise I might have gone through a little bit quicker than I might have normally. If you do have questions, please email me. It's becky@tradictiv.com, or you can email support@tradictiv.com. Also, of course, tradewithufos.com/Becky. You can post questions here, which is great for everybody because we all see the questions and answers and we all learn. So what I'm going to do now is I'm going to cut the stream to the free platforms, continue within the closed coaching session, looking for new opportunities. We'll take a look back at that TradeStation scan, unless you guys have specific suggestions that you want me to look at. So bear with me whilst I cut the stream. And I'll be with you in a second. For everybody that's watching on the free sessions, thanks for joining and I'll see you next time.